Looking at global equities in March, we had markets up a little more than 2%. It has been a weaker start to 2022 and markets are still down around 5% year to date. But astonishingly, since Russia's invasion of Ukraine, we have markets up around 4%. It's also an interesting point to look at the market performance given it's 2 years now beyond the original sell-off in March 2020 from COVID. We have markets up around 90% from the lows, but also up around 30% versus the pre-COVID elevated market levels. So it's been an exceptionally good period for markets. Looking at sectors in March, most sectors rose, but energy was once again the best performer, rising a little more than 5%. And by far, energy has been the best performing sector year to date, up closer to 30%. And this is as the market thinks through future supply concerns, given Russia's pivotal place in global energy supply. Looking at regions, Latin America was the best performing region, up a little more than 12%. And again, some of these countries being large commodity producers will benefit from high commodity prices, hence the better performance in the region. On the flip side of that, emerging Europe was particularly weak, falling a little more than 5%, as a lot of the countries there are in close proximity to conflict and will be disadvantaged by that. If we think about what's been on investors' minds, it continues to be very elevated levels of inflation. And if we think about Russia's invasion of Ukraine, it has been the inflation shock on top of an existing inflation shock. And people are really starting to think about what this means for central banks and their need to really curb inflation and raise interest rates. We did get a sign of that in March, and that was with the Federal Reserve committing to a 25 basis point or 0.25% interest rate hike and really beginning their tightening cycle. And investors are starting to think through how the economy will react to this hike in interest rates. When we do look back over the last 12 tightening cycles from the Federal Reserve in the US, it's only been 3 of these that haven't resulted in recession. So there's no guarantee that this time won't be different, but investors are rightfully thinking through how a highly levered economy that has been supported by central banks can respond to elevated level of interest rates. So going forward, it's all eyes on inflation, all eyes on the path of central banks, but also in the coming weeks, we will start to get reports from the US earnings season that'll give us great anecdotes around how some of these inflation and margin pressures are hurting companies.